Welcome to episode 254 of The Numbers Game. I'm Jace. I'm here with Nick and Marty. How are you, fellas?
Going well, thanks, Jace. Please help me out, mate. I was at a family function on the weekend. I was copping so many tax questions. What do I do when this happens? What do I do when this happens? Government's taking it all. How do I protect my money? How do I protect my property? Land tax, payroll tax. I was just getting bombarded. I'm just a simple coach, you know? It's just a simple coach. Jace, help me.
You are bang on the topic, Marty. It is tax. And I saw this video I want to share with you just quickly, just to kind of get the idea of how silly is the Aussie tax system. Here's the video.
Aussies are doing it tough right now, but we need to get our revenue up. So let's come up with some new taxes. What do you got?
How about we raise income tax?
No, leave that. It's already at 45%. They're practically working for free.
How about any time they invest their money into an asset, we tax them on half when they sell?
Yeah, we already do that. It's called capital gains tax. Come on, we need something original.
What about money they make in a business?
Company tax, already got that.
What about when they pay their employees? Can we sting them there?
That's payroll tax, and we've been stinging them since 2007.
What if their boss gives them perks like a company car?
Yeah, fringe benefits tax, already getting that. Come on, think.
What about petrol? They can't drive without it.
Yeah, fuel excise tax, every litre.
What about super? Can we tax their retirement savings?
That's super tax. We tax that coming in, we tax it coming out. We've got that covered.
All right, hear me out. How about we raise GST to 15%?
Now we're talking. I'll write that down. We'll circle back to it. 15%.
What if they just want to buy a nice car? Can we get some of that?
LCT, baby, luxury car tax.
Stamp duty?
Got it.
Council rates?
Every bloody quarter.
More toll roads?
Yeah, we're milking tolls.
Alcohol and cigarettes? Why can't we tax it more?
Yeah, we're taxing that to the moon.
Imports?
That's customs tax. Guys, you're not getting me. I want to tax them on everything. Something that won't ever let them get ahead or even enjoy life anymore.
What about we reintroduce the death tax? Someone dies, they want to pass something down to their kids. We take a cut.
That's absolutely genius. Let's put it on the list and draft it up.
So, boys, that video got me kind of thinking about the Aussie tax system. Now, you know, just hearing how ridiculous that is, how many taxes there were, how many things they're trying to kind of bring in. And then we have some of these new tax reform ideas that are coming. So, you know, the 15% GST, the inheritance tax, the higher wealth tax if you've got assets over a certain amount. So you got all of these things that are coming in there, and it had me asking the question, you know, as a tax accountant who sits there dealing with people every day talking about tax, the question I asked myself was, do Aussies pay too much tax? Now, you know, Nick, Marty, after hearing all of that, I'd love to know your kind of, you know, straight off the head, what do you feel about how much tax you guys are paying?
Well, it's always too much, isn't it? Because, I don't know, like, it seems like a lot. On that, though, like looking into this of late, I see as a country, we're not actually taxed overly high compared to others, which is interesting. Yeah. So that's got me rethinking a little bit. For me, it's more about, and that was a really good video, it's more about how convoluted it is or confusing it is. That's what gets me. So,
yeah. And my cortisol levels are going through the roof after hearing that. There'll be a breathing tax next. It's just amazing. But Jace changed my perspective on it because I feel like, look, can I just give it to charity? What can I do?
No, 100%, mate. Well, look, yeah. So to talk you through, I'll give you a couple of examples of different tax brackets and the actual amount of tax they pay. And then I've changed the numbers a little bit to add in kind of the more common ones that we all pay. You know, Marty, you're driving from the Yarra Valley, you know, into the city to meet clients. You know, you're paying fuel tax or fuel excise tax. Nick, you've talked about, you know, selling an investment property recently, capital gains tax is coming your way. So what I've done is built in a few of the regular ones that a normal everyday worker would cop. So the example I've got here is around the, example of a 100K income earner. I'm just going to give you a bit of a spread of the different earners. So I'll start with 60K. If you're on 60K, you are losing $16,500 in taxes per year, about 28 cents to the dollar. Now, that's actually higher than the marginal rate because what I've done there is build in the extra amount you lose on GST when you have to spend money to live, and then also the amount you lose to the tax man through superannuation as well.
28 cents in the dollar, so 28%.
Yep, 28%
so
for
you're
a 60K earner.
Okay, 60K, I just want to make sure I understand all this. So if I'm earning 60, hypothetically, I'm spending this amount on my living expenses.
Mm-hmm.
So you're calculating what you'd pay as income tax, what you'd possibly pay as GST along the way.
Yep.
And then super. Okay, it's 28%.
Yep, spot on. So on the 60K salary, That was nearly 10K in income tax, 1,200 in Medicare levy, 1,080 on super tax, GST about $3,500 on your spending, assuming you spend 80% of your take-home pay, because not a lot of people have got much left over. Most people spend about 80% of their take-home pay. Fuel excise of 620, and then GST on your fuel is a fuel of another 227. So that's how you get to your 16,500 out of your 60, losing 28%. As you go up, $80,000 salary, you lose 31%. I'll save you all the numbers, but it's the same across Medicare, super, GST, fuel excise. On a 100K salary, you lose 33%. So, it's gradually kind of going up. But then it's when you get to the 250K salary, you're losing 44%. So what you got to remember here is generally the more money you earn, the more money you spend. You've got a more expensive car, you've got extra taxes like Div 293. You've then got extra money going into super, so you're paying more tax through super. So all of a sudden, when you look at all of that, a 250K salary, losing $110,000 to the tax man, or 44%. So a lot of people that, kind of sit there and go, tax the high income earners, they're actually, proportionally as an economy and as a country, high income earners make up the very large share of the amount of taxes that are paid. Now, I won't bore you guys with the actual video, but if anyone's listening going, geez, I don't really understand how that works. There is a video called The Tax System Explained in Beer. And essentially it goes into a story about 10 mates that are at a pub, and they pay their bar tab based on their marginal tax rates of the average person across Australia. So on a $100 bar tab, the first 4 people generally drink for free. They're not paying any tax in that story. And then from that, the next guy pays $1, the next guy pays $3, the next guy pays $7, and the highest income earner, the 10th mate, actually pays closer to 50% of the bill. And then the story goes on. It's actually epic to kind of watch the whole thing through. It's about 4 minutes. The 10th mate cracks it. He's sick of paying tax. He's sick of paying too much tax or too much beer tab. Every week he's paying more than half the beer tab. So one week he decides not to turn up. And what you imagine here is a story saying if that person leaves Australia and decides to go pay tax somewhere else where there's less taxes, it puts a strain on our economy. So we have to be careful not to continue to punish the high income earners and try and say tax them more because we should. You've got to make sure that there's an even playing field and that we're actually thinking outside the box of how to improve our tax system, which then comes into what, all these stories about tax reform that is going around Australia at the moment. So Nick, Marty, what's the most crazy tax reform you've heard so far? Have you got any that are jumping out at you, whether it's the GST to 15% or spare bedroom tax? What are the ones you guys have heard before I go through my little list of the ones that are being thrown around the government rooms at the moment?
What's the spare bedroom tax for me? That's just ludicrous.
Stood
that's
out,
definitely mine. Yep.
Yeah, they want to mandate that we have to let employees work from home a few days a week. But then also, if you've got a spare bedroom, you're going to pay tax for that. So you need a spare bedroom to work from home, but we're going to tax you. So figure that one out. Marty, what have you got?
Oh, the main one I worry about is putting capital gains tax on owner-occupied homes. That's the one I worry about. Because I go, it's the last bastion of people being able to build, some wealth if you're not getting charged per bedroom too. So just stay away from that, could you? Give us something.
Which is a very Americanized thing. So, American in the tax system generally doesn't have the main residence exemption, but they're claiming a tax deduction for the interest on their homes as well, right. And then paying tax when they sell their homes. So, very different systems around the world. I will run you through some of the tax reform ideas, and if anything jumps out at you, feel free to stop me. But we've got the GST increase to 15%. Now, we've got a whole episode on that. I'm actually a big believer in tax reform. And before I get slammed in the comments again, if GST goes up to 15%, what I'd love to see is that the marginal income taxes come down for everyone, because generally put more money in people's pockets, and if you choose to spend it, that's how the government's getting their 15% share of the GST back. Obviously, yes, you have to live, but it should be balanced out that way. Inheritance and wealth tax. So inheritance tax on passing over of inheritance, and then also there's an idea that if you've got more than $5 million in assets, you should be taxed an extra 2% annually on your value of your assets. Thoughts on that one, Marty?
Yeah, Jace, I speak to everyday people and they've got so many questions. They don't know what to do. They don't know how they're being ripped off, and they don't know what to do next. So it's very frustrating.
I think that's the hard part is the decisions you make today based on a certain tax system may not be the one that you're actually playing in a few years down the track. And the example there is one of the next ones. I've got EV road user charges. So you might have gone out and bought an electric vehicle because you said, yeah, the environment, I'm going to get some concessions for having an EV. I'm going to avoid some, luxury car taxes and other bits and pieces, or I'm going to avoid fringe benefits tax by having an EV, which is exempt from FBT for a certain period of time. But then government's gone, oof, we're missing out on fuel excise revenue. We better bring in a new tax. So the EV road user charges come in. So again, that's another example where, the person who got the EV thinking that, they're going to avoid paying some taxes and whatnot, it changes again.
So they're copping tax and they're copping a significant decline in the value of their vehicle. So are you telling me EV is not the way to go, Jace? Are we going back to diesel V8s? What are we doing here?
I did go for a ride in my mate's new Defender, and it's a diesel 900 Ks to a tank. He was pretty happy with the new Defender. So this isn't an ad for a Land Rover though. So we will keep moving through the tax list because it is pretty heavy. You guys may be familiar with the Div 293 tax. Again, that's an extra tax for higher income earners. So if you earn $250,000 or above, the money that goes into super cops an extra 15% tax on it. So for example, you may do your tax return. You see that you've given 45% of everything you earn to the ATO through your normal tax return. But then, lucky you, a couple of weeks later, you get another bill from the ATO for Div 293, and you can elect to obviously pay that from super, or you pay it out of your own pocket. So, yay for taxes.
So Jace, when you say that, when does that tax kick in? Is that 250 plus super, or is it all inclusive?
So combined. So you combined 250K. If you're super. Sorry, if your taxable income is over 250K, they then combine your super on top of that to work out the Div 293 charge. Yeah. But the reason I bring that up is they're looking to expand that. They want to capture more people in that Div 293 kind of tax. So whether it's, reducing the kind of threshold, but it's been listed as one of their tax reform ideas. Obviously, we talked about the spare bedroom tax. So one of my notes there is politically toxic.
Jace, before you go on, just say, so this is income dependent. So if people want to put in extra super, how you can put it in, Nick, what is it? You can put a certain amount in over 5 years as a...
Yep. Well, you can put in 30K a year and claim a tax deduction for that. And then if you haven't, I think we're thinking about the 5 years.
Yeah, the 5 years.
Anything you haven't used of that 30K, you can then accumulate that into one financial year.
So if you loaded up on that, in 1 year, and that got to 250, even if you were on, let's say, 180, that could still impact you. Is that right or no?
It's only for your concessional contributions of that year, that cap that year. So
that's not an earning.
No,
that's right. That's what I mean. But
so it is actually your combined income and concessional contributions if more than 250. So if you're on 230 and you've had 30 grand go into super, you're now at 260, you're going to cop the extra tax. So it's one of those ones that sometimes people don't realise that if their work is contributing super and they've got some reportable employer super contributions or, different bonuses at different parts of the year, it can definitely cook that extra tax for them, which is a bit of a surprise the first time you get the Div 293 bill. So we did touch on spare bedroom tax, which is basically suggesting that it's going to force people to downsize, puts more properties back on the market, for families to be able to buy. Let's say you've got somebody who needs to downsize with spare bedrooms. That was the idea there. I think it's bloody stupid. You got negative gearing and CGT, essentially wanting to limit negative gearing to one property only and then scale back the 50% CGT discount. So again, more ideas that are being floated as ways to tax the everyday Aussie that apparently isn't paying enough tax yet. Another brilliant one is the stamp duty. I say brilliant, a lot of sarcasm here. Stamp duty and land tax swap. So basically saying that stamp duty one-off is inefficient, but if we had an annual broad-based land tax on everything, that would be better for the government and, trying to phrase it as better for individuals as well. Also talked about corporate tax reform. So which this one I can get behind part of it, which is to reduce small business tax rate to flat 20%. I think, again, if you're running a company, you're hiring people, you're paying payroll tax, you've got GST, got everything else. If we drop it to 20%, it encourages more businesses to form and set up here in Australia and do good business in Australia. You always hear the stories of the big corporates, your Googles, your Facebooks, I won't go into a further list, but how they're structured offshore in Ireland or Jersey, UK or Hong Kong or BVI, and they pay, or, you know, a lot of people are going to Dubai these days, but much lower tax brackets, even Singapore. People are not structuring in Australia and leaving the money here. They're finding a way to send it to other jurisdictions where the tax bracket is more friendly. So if we can have a better tax bracket system here for business owners, all of a sudden there's more incentive to pay tax in Australia. Again, go back to the beer video of how the tax system works there. Outside of corporate tax reforms, the ones I don't like is a trial of a new 5% net cash flow tax on large businesses. So they want to work out the positive net cash flow of a large business and then tax them 5% on that. So again, it's like, well, what are we trying to do here? Why are we discouraging businesses from being good and having good cash flows and paying their bills on time? That's probably the main ones. There's another list of 10, but I've waffled on about the tax reform. But just in hearing all of those ideas for tax reform, how does that make you guys feel about where we're at the moment?
Well, you can get rid of that 5% on the cash. Like, can you imagine people in general savings that had general savings and we say, oh, you got 50 grand in savings. Let's take 5% of it for the sake of it. I mean, come on. Put it into wages. Company owner's going to put it into wages, into expansion. Let the damn businesses grow. That's innovation. This is what I don't understand is do we want to be an innovative country where we're actually putting capital towards things that are going to grow and create more opportunity, or are we just going to fleece everyone for the hard work they're doing? Get your head around it. It's just, come on.
100%. Now, Maybe this is what the government has got the access to the data, and this is the narrative that they want to build on. But just sharing again,
use it properly.
Yeah, we'll use it properly, and again, I think tax reform. Our system is probably pretty complex, and for the sheer amount of taxes to end up, I think we're about the 29th lowest out of the 38 OECD countries around the world. So if we're in the bottom layer there. And we have all these complicated systems, and this is why, I'm not saying just keep accountants out of a job here, but it is super complicated year on year, the training we have to do, everything else, and the pressure put back on the accounting profession to keep up with everything. And even, remember through COVID, JobKeeper and JobSeeker and government grants, it was all go see your accountant. It's all your accountant will sort this out. But it's not really the most efficient way to run an economy. Now, they call it a tax wedge, and it's the amount of tax, across all those things that I talked about. So Australia's tax wedge on average, the average amount of tax across the board is 29.6%. So if you think about it, you made it to the barbecue, Marty. Most people there, if you just assumed that everyone was losing about 29 to 30% of every dollar they earn. The OECD average is close to 35%. So it's not a big swing between 35 and 30 to get from to being the lowest. The highest is actually Belgium. Do you want to hazard a guess as the tax wedge in Belgium? This is the wedge or the average.
50.
Very good, Nick. 52.6%. So you imagine, you want to go live in Belgium and work in Belgium. You only got 48 cents left of every dollar you earn.
Good chocolate, though. Good chocolate.
Great chocolate. Great chocolate.
The only reason, yeah.
So, I don't share that to say that Aussies shouldn't feel like they're getting, a bit of an unfair stick with the tax because, again, it's complicated. There's so many things coming at you. And, again, we've always talked about how much we hate payroll tax. I think there's a simpler tax system with a bit of tax reform that gets better. Then we think about, well, where does all the tax money go? If, there's a sheer amount of money that goes to the government. I think it's around 800 billion in revenue. Marty, do you want to hazard a guess as to where that money gets spent and where it goes?
Well, I'd just load up on machete bins. That's where I'd probably start to drive the refugees. But, God, I don't want to hazard a guess because I'm going to be cynical.
Oh, God. If any,
180,000, isn't it, for a machete bin?
No, it was 300,000 per bin.
300,000 per bin.
Yeah.
For criminals to have face cam recognition to drop off their machetes. Great.
Yeah, I wonder. I don't want to go there.
Brilliant.
But I did see on the weekend like a little doco or story about fire trucks. We've got like an old fire truck portfolio that need to be replaced, and the fire trucks are breaking down and there's a big issue. So a fire truck can cost about $450,000 to get the truck and fit it out. And then I just pictured a fire truck fully fitted out next to a machete bin. and just thought, how is that even possible? Won't go there because this episode will get out of control if we start talking about machete guns.
Yeah, I know.
I'll tell you where the money goes. 37% of the $800 billion goes to welfare or social security. So think pensions, NDIS, and family support, family tax benefits. So, you know, that's a giant chunk of the revenue collected being redistributed. 16% goes to healthcare. We do have a great healthcare system here in Australia. Think Medicare, people's access to hospitals. You know, it's not like that around the world. Some people cop really huge medical bills when they go to a hospital, let's say in the States. So that is one thing here where we do have a fantastic healthcare system. 7% on education, about 7% on defence, and then we need 3% of that to service the interest or the interest on the debt that our government has taken on. So pretty quickly that gets spent. One thing I do want to highlight though, which I think is another episode in itself and becoming a bit of a problem, and you know, if anyone's out there that has some expert knowledge on this, please reach out because I'd love to discuss it. NDIS. Now, the growth in how much NDIS is costing the government to maintain and continue with, in 22-23 it was a $37 billion bill. 23-24 it was a $42 billion bill. It's estimated to become a $52 billion bill this year between 25-26 and as high as $65 billion by 2029. Now, that is bigger than what we spend on education and defence going towards NDIS, which has been well known to be rorted left, right and centre. So any comments, Marty, Nick, on where the money goes and would you like to see it used in any other way?
Look, it's just I actually watched a Four Corners story the other night on NDIS, and I don't know if anyone saw it, but the building of NDIS houses in they're focusing on the west of Melbourne, and basically these places are empty because they're not near hospitals, you know, basic healthcare needs which people with disabilities need, and what blew me away was just the lack of regulation from the government. One particular business in question, I can't remember the guy's name, but ex-solicitor who had liquidated his past business, hadn't paid staff in his past business. Somehow he's allowed to get involved in building NDIS properties. And then there's another guy on the Gold Coast who, you know, was took all this investment from people and basically didn't do anything with the money, just use it personally. And again, it's just the regulation that really is frustrating. Like, how are you even letting these people involved in these schemes? The government's got a lot to answer for. And, you know, again, talking about Belgium, I don't mind paying 50% tax if I see value in it. And that's the biggest issue at the moment. And our government, it's just got a lot to answer for, you know.
Well, I won't say where it was, but it was in a neighbourhood that I might have lived around. There was a NDS scheme going on in one of the residential properties for about 9 kids coming to every day, a residential house, and it was rorted and shut down. So it was interesting what was going, the funding that's going towards it's being utilised, which is disappointing because there would be people and kids that actually really need it, right? So it's always the cowboys that hurt, the real people that need. But Jace, I want to throw a question to you. What do you think in regards to Australia being more innovative? What would you like to see? Like, we talk about simplified tax systems. What would you like to see for more innovative investment from Australia? What would help us, from you being in the trenches every day?
Oh, look, I definitely think the reform around the corporate tax rates. Corporate tax rates are prohibitive. It doesn't encourage investment here in Australia to grow good Aussie companies. And then even the new startups that start and they get onto something special very quickly, there's tax specialists here in Australia that are talking to them about how to restructure and sell their IP or their goodwill or their whatever, asset they're building, sell it into a holding company in Singapore or somewhere offshore. These schemes exist. It's legal. They dot I's, they cross T's. If the HO or ASIC or anyone comes along and looks at it, it's, what can we do? And it's, so I think encouraging investment into Australia by having lower corporate tax rates is the biggest thing I can say that would encourage innovation and development of new technology and leaving it here in Australia. You don't hear about too many good Aussie tech companies, when you compare to other places in the world, or especially like America, the top 4 or 5 big ones over there. The ones here in Australia are, falling behind. And I think it's because we are so prohibited by tax in that corporate environment. Yes, we've got the R&D grant, but even then, when it comes to some technology development, they're getting really, really hard and strict on what constitutes, new innovative technology versus, reworking and rewiring things to work better. So again, you're looking for efficiencies, and yes, it's innovation, but maybe it doesn't quite meet the strict parameters of how to receive the R&D grant, which if you can pull it off, the R&D grant is a fantastic, cash flow, tax offset, helps boost a business in that startup phase while they're developing something. But again, it's also one of the most highest audited and regulated area where the ATO come back after you to say, you didn't do that properly, we want that money back. So, it puts extra stress and extra strain on people that are just trying to do good things and grow and develop good new technology and good business.
Yeah, good answer. Thanks.
No, my pleasure. Anything from your end? What would you like to see?
We haven't got a long enough podcast. For me, it's like just in regards to, like you said, there's stuff that's unregulated that's getting, just getting abused really. And then, where we probably need to have more of a balance into, like you said, good technologies and good innovation. I think maybe the public's skeptical in regards to business owners getting any, tax benefits or any sort of support. But I think it's really important because our small to medium businesses do well, creates more jobs, creates more income, creates more opportunity, creates more taxes. And I think I was having this discussion on the weekend. They said, business owners always win out. Well, no, they carry a lot of pressures and they're trying to strive ahead and they give people jobs and, really help the economy. And I think there's still a bit of a, us against them type of thing, which is not the case. I think, it's got to change.
No, 100%. Well, I appreciate you guys listening to me ramble on about the new tax reforms and the different things that are being suggested. And just to put a bit of a spin on, do everyday Aussies pay too much tax? And while the data suggests that we don't pay too much tax compared to the rest of the world, I would say that we're taxed the wrong way in the wrong areas rather than kind of making it a simpler system to understand. I think we do need tax reform. I think there's a debate out there that's worth having, but we just need to make sure that, people are getting involved in these decisions that aren't just driven by, government people that don't have an idea how the everyday Australian, needs this system to work. Appreciate you listening, guys. Give the Numbers Game podcast a subscribe if you're on YouTube. Give us a follow if you're on Spotify or Apple Podcasts. Appreciate you tuning in and listening. And until next time,
let's get innovative. Tax me out of here. Game over.
This podcast is for educational and informational purposes only. The conversations are of a general nature and do not qualify as financial or tax advice. We recommend before you make any financial decisions, you consult a licensed professional. Individuals on the podcast may hold positions in the companies discussed.